I think the question of the day really is it better for stocks to have a healthier economy than we expected, but fewer rate cuts, or to have more rate cuts and a pronounced economic slowdown?
To me, this is a sweet spot. This is a great environment for equities. You've got a strong economy. It's slowing, I still think, but it's strong. And you've got a Fed who is still willing to cut rates. We still think there's a 25 basis point cut in November and December, probably slower move through 2025, but it's still a rate cutting cycle backed up by a strong economy. I think this is a great environment.
So slowing, but still strong. And against that backdrop, how do you make heads or tails of what's going on today? You see S&P 500 futures down about 0.5%. Of course, not to extrapolate too much on a single day, but it does seem like the market is taking this good news as bad news.
And you said it before, it's a really dramatic equity market. You've seen that for a couple of months where it just, the moves are pretty wild. And I think today there are question marks about whether or not the Fed is going to cut. If it didn't cut, that would certainly be, I think, negative news for the equity market. But we don't think that's the case. I think we're going to hear a lot from Fed speakers this week, provided the inflation report doesn't show a significant pickup in inflation. I mean, that's a big question. But provided it's in line with expectations, and I think you're going to see an equity market which hopefully settles down and we start to move back upwards.
You know, I think about some writing over the weekend from Stuart Kaiser, who we're talking to later in the show, and the point that he made was you could actually see a bounce heading into the election season. Do you think that in the rest of October, given what a strong September we had, there are more room for gains, especially as we start to get those earnings releases? How much upside potential is there?
Yeah, I think there is upside. And as you said, look, this is unusual because into an equity market, into an election, you would typically expect to see some volatility, some concerns. But you've got a global economy which has got a ton of stimulus coming through. We're not just talking about, of course, the US, but you're seeing it around the world, including China. So, no, I think that there is room for a melt up into November. The only thing which is restricting it is the fact that valuations are really extended. So I don't think you're going to see the same kind of moves you saw in 2023 or early 24. But certainly this is an upward move for the active market.